Brent is our COO, and something Brent and I have in common, we are both from the great state of Idaho, Brent and I. But Brent also really has a passion around sales processes, sales methodologies, and he ties that and marries that with his passion around building business acumen. And really helping sales individuals, account managers, anybody involved in the sales process to really understand how they can apply their business acumen to grow sales and to be more effective. And so we're really excited to have Brent on the line today and to have you learn from him. With that, Brent, we'll turn it right over to you.
Thank you, Mike, and good afternoon, or good morning, good afternoon, good evening, depending on where you're calling in from. It's good to have you here with us today as we get a chance to talk about building business acumen to grow your sales. A topic, as Mike described, I've got a great amount of passion around as you think about how can we really differentiate our sales teams? How can we help them succeed in their roles? And kind of how do we align our goals and objectives with our customers' goals and objectives through this understanding of business, understanding business acumen, metrics, measures, strategies, etc. So looking forward to spending some time with you today. As we get started, as Mike described, we're going to be using that chat box. So make sure you have that open and available. And just to get us started today, have that open. Make sure it says send to everyone. That's what we're looking for. And in there, just go and put where you're calling in from. Could be a city, could be a state, could be a country. Make sure that's set to everyone. Let's see where people are calling in from. Myself and Michael are calling just south of Salt Lake City, Utah. Our claim to fame, we had a great opportunity, 2002 was it, Mike, where we got a chance to host the Winter Olympics. Obviously, Winter Olympics wasn't too long ago there. Where are others calling in from? Go ahead and put that in that chat box as we get going today. Make sure that's open and comfortable using that. It's interesting as you think about where you might be. You could be at your home office. As you think about what's happened the last couple of years, it's really changed. Here at Acumen Learning, it's changed dramatically. We are pretty much a come into the office type crew. And of course, the last 2 years, we've really changed the way we do what we do there. Well, as we get going today, looks like maybe some of you are nervous about sharing where you're calling in from. No worries. We're going to go ahead and jump in, but please be comfortable with that chat box. Make sure that's up and running as we get going today on our business. Oh, thank you, Jeff. Saved us there, jumping in with us. Appreciate it there. Calling from Michigan, I think that is Grand Rapids, Michigan. Welcome, welcome. Well, as we get going today, we're looking at building business acumen to grow your sales organization. That's kind of our focus in our area. I got a quick question, and you can kind of put it in the chat box if you're comfortable doing that. Really what we're trying to get a feel for, kind of who's on the call. In fact, I'm going to go ahead and try a poll. I know we're adding people. I've seen people join as we come. So if you're joining us, welcome here. The quick question I have for you is, what's your role? Are you in a sales role, meaning a sales leader, sales rep? I should see that as a poll question for you. No, Brent, I'm more a part of sales support in my role. You know what? Actually, Brent, I'm more sales enablement, sales training, that type of stuff. No, I'm kind of a learning development where I oversee some of sales, or maybe it's other. Maybe you're an operations role, you're a different function. You just heard about this, want to come be a part. No worries if you're not part of sales, but assume that many of you are coming from that background. Of course, make sure you hit submit so it'll calculate the numbers as we get going today. Looks like as I'm just scanning, it's going to share the results here shortly. Looks like most of you are kind of sales leaders, sales reps, so welcome. Got some sales support, sales enablement, as well as some L&D. So good to have you with us today as we get going. We got a lot to cover in about 45 minutes. Going to try and give some time for kind of a Q&A as we get going there. So appreciate, feel free though throughout to use the chat box as a way to kind of communicate. We're coming to a program, a webinar around building business acumen to grow your sales. Here at Acumen Learning, we've been in business for 20 years. We focus purely on this topic of business and financial acumen. Understand how a company makes money, making decisions around that. How does that impact sales growth? How does that drive your customers' sales growth? That's really what I want to focus on today. So what I want to do is make sure, first of all, we get a good definition. Make sure that we're all on the same page as to kind of what do we mean by business or financial acumen. So if you're comfortable, just in the chat box, what is business acumen? What does that sound like to you? Go and put it in the chat box there. What do you think business acumen is? If a colleague came to you, one of your sales reps, maybe your sales leader, and they say, hey, I hear this topic, business acumen, or hey, you're going to a program where they're going to do a little webinar on business acumen. What is business acumen? How would you define that? Anybody want to take a weigh in on that? Awkward silence. Thanks, Jeff. Yeah, decision to drive business. Thank you. That ability to drive business. Absolutely. When you came here, as you think about business and financial acumen, how many of you think of financial statements? That's often what we get when people think business. It's understanding financials. I'm going to suggest to you that business acumen is much more than just your ability to understand financials information. As we think about business and financial acumen, working with 30 of the Fortune 50, many of the Fortune 500, our definition is really this understanding of how a company makes money and being able to make decisions around that money-making process. That's our definition. As we work with many companies, we'll do about 1,000 sessions a year, different industries, different organizations, different functional roles. For us, we just boil it down simply and understand how a company makes money and then making good decisions. Now, of course, financials are part of that, the ability to understand financial data that helps drive your decision making. Now, of course, we would expect CEOs of these great companies, the best CEOs have business acumen, right? Who else do you think might have business acumen? Well, we might expect our leaders to have good business acumen. We also might expect employees. You think about who really impacts the business. Is it the senior leaders of a large corporation? Or even a small, 50-person organization. As you think about that, the CEO, she cannot be the only people who understand their business. If I'm a CEO of an organization and I have 50 employees, I want everybody to understand how we make money. And then with your functional expertise, be able to execute. Our foundation came when two senior executives at Franklin Covey decided to start Acumen Learning. They had worked with some of the best companies in the world. And what they found is senior leaders were doing everything they can to squeeze a dollar of the financial statement, create greater profitability, drive greater cash flow, etc. The challenge is many of these large organizations, even if you have 50 employees, it can be challenging. But imagine you have 10,000 employees. Imagine you have 100,000 employees. How do you get them all on the same page driving towards the results? What we find is employees are functionally brilliant. You know more about sales than I'll probably ever understand about sales. We get so focused on kind of the tender we're working on or the transaction with our customer, we rarely step back and kind of get that big picture perspective. So the real goal of business and financial acumen is the ability to help employees take the knowledge of their business, knowledge of their customer's business, and with that data and your functional expertise, help them make better business decisions or drive your data out decisions. So as we talk about business or financial acumen through the lens of a sales organization, I'm going to suggest to you today that we truly want salespeople who have business acumen. If you're looking to try and differentiate your sales organization, really set them apart, get them a seat at the table where they no longer are seen as a sales individual, they're truly seen as a trusted partner. I'm going to suggest to you that business acumen can help you do that. So as you look at it, how do you think of it from a sales perspective? It's not just understand how our company makes money, but understand how your customer makes money, and then help them make good business decisions around what they're trying to accomplish. That's how business acumen can really make a difference. So let me ask you this question. With that brief definition, I want you to ask yourself, why would business acumen and understand how your customer makes money and helping your customers make good decisions around the money-making process, why does that matter to you in your role? And why would it be important to your customers? Now, I got a quick video I want to share with you. And as you're watching this video, in the back of your mind, I want you to be thinking about this question: why business acumen matters to you and to your customer. Kind of a fun video. It's a little older. It's talking about an industry, all the changes that go on. But I want you to be thinking, why would an understanding of business or business acumen be important and helping companies make good business decisions? So let me stop sharing. I'm going to go ahead and jump into the video. Now, depending on the speed of your internet, it may go a little faster, a little slower. So once it's done, just put in the chat box, done, or let us know, and I'll move on from there. What a fun video, right? All the changes that happen. So the question really is, so going back to my slide deck is why is business acumen important to you? Why would it be important to your customers as well? A great way to kind of think about that. In the chat box, anybody want to weigh in on that? Why would business acumen be important at this time for your customers? That's really the question you've got to think about. And what I'm going to suggest to you here at Acumen Learning, we provide a program called Building Business Acumen for Sales Professionals. It's all about helping your sales leaders move from sales leaders to business leaders who sell. That ability to truly understand customers. This is a differentiator. We don't teach methodology. I'm sure you've got great methodology in your organization. You also have great tools, CRMs, platforms, et cetera, to track. The real opportunity is to differentiate your employees where they truly understand the business of those they're selling into. They move from just selling your features, advantages, benefits to truly understand their customer. Think about all the changes that your customers are dealing with today. We're dealing with supply chain issues today. You're dealing with significant inflationary impacts to your business, but also your customer's business. Boy, the more you understand about what your customers are truly trying to do, then help them make a business case as to how your product or services will really drive their results. That's what this topic, that's how you can differentiate yourself. So if you're interested in trying to create that differentiation, you absolutely want to talk with us. So let me go ahead and jump in. There was interesting, as you think about how well do we know our customers? How well do our sales individuals truly understand the businesses they sell into? This is great research. Some of you may have seen this, where they literally looked at, asked sellers, how well do they understand their customer's business? They also then asked those they're selling into, their customers, how well do these sellers weigh into their business? And I'd love you to weigh in if you could on your chat box. Each of them gave themselves a grade. So from the sellers, what letter grade do you think a seller, sales individuals, gave themselves on understanding their customer's business? A, B, C, D, or E, A, B, C, D, or F? How do you think they graded themselves? Anybody want to weigh in on that? Just put in the chat box. What would you guess? How well a seller knows their customers? How would they kind of rate themselves? It looks like C is kind of a common C is kind of where we're at. What do you think about when you then go to those they're selling into, the buyers? What did buyers say? What grade do you think they gave them? If the sellers gave themselves a C, what grade do you think the buyers gave them? A D? Weston says a B. Well, from this study, it's a Forrester report. You don't have to read it. It's actually like a $1,500 report, but you can actually get a number of quotations off of it. Here's what they gave themselves. The sales individuals said they were a B. They didn't overshoot it. They weren't quite right in the middle, but they're right there, right in striking distance, right? Gave themselves a wiggle room. Maybe I can improve a little bit better. Those that they sold into, though, buyers gave them an F. There's a number of quotes you can look at where they talk about, boy, they keep throwing over these solutions, but they truly don't understand my business. Boy, there's so much information online today. How come they don't really come prepared to understand what I'm trying to do? Folks, this is the differentiator. If you want to change the way you sell, and it can change the mindset of your sales leaders to really see themselves as a business partner who happens to sell, a business acumen can help you to get there. So what I want to do today is I want to give you just 5 fundamental drivers every company focuses on, and 5 lessons around the driver. Now, of course, we don't have time to go through the full content we do in a 2-day program, but I want to give you a simple framework. These 5 fundamental drivers every company focuses on as a resource for you to use as you think about your customers, as you talk with your customers, and kind of think about how your products or service can drive towards them. I'm also going to give you some simple principles or lessons around each one of these drivers that you can use today, tomorrow, as you interact with your sales team, as you work with your organization. And if you find this is helpful, obviously we'd love to talk with you and provide additional things that might help you and your teams. So that being said, I'm going to give you a quick understanding of these 5 drivers. Cash is one of the most important drivers companies focus on. As we look at that, I want to quickly just give you the difference between 2 key cash metrics most companies focus on, both their cash position as well as cash flow. Then we'll talk about, so how can you impact it? Number 2, I want to walk you through profitability. This is one you'll hear your customers talk a lot about, either in the context of growing their revenue or reducing their expenses. So I'll highlight just a couple metrics that they often talk about, and more importantly, how can you drive towards those metrics? Number 3, what their assets. What do they have and how do they utilize their assets will be a focus of that discussion. Then I'm going to jump into growth. Understand, obviously, companies want to grow. If you're selling into publicly traded companies, they absolutely want to grow. But even privately held want to expand. Understanding their growth objectives, what they're working towards, how your product or service can drive towards that is a key outcome of that. And then finally, a fundamental driver every company focuses on, that's people. Their external customers, the buy or use their product or service, much like you and your sales organization. You're very interested in what your customer is trying to accomplish, but also internally, how well can we execute from a strategic perspective? So I'm going to give you those 5 drivers, that simple framework we use with all of our programs, and some lessons that might help you and your team get better at really becoming that business leader who sells within your organization. So that being said, let's jump into the cash driver. When you think about cash, I love the importance of cash in business is absolutely vitally important. In fact, one of the number one reasons a business fails is they run out of cash. But I got a few quotes I want to share with you as we start. The importance of cash. Why is it important in business? Well, cash is blank. Put in the chat box. How would you fill that out? Cash is... what would you put in there? King. We often say king. Absolutely. Queen, royalty, lifeblood. In fact, Ron Sharam, a great consultant who worked with GE for many years, a number of companies, he says cash is a company's oxygen supply. Think about that. If it's truly the oxygen, well, they've got to have that to survive. In fact, it gets even more serious. Al Shugart, former CEO of Seagate. In fact, he was a founder of Seagate. He says cash is more important than somebody's mother. Now, I'm not saying that to you as we have Mother's Day coming up here not too long, but cash is vitally important. So as you think about from a sales perspective, how should I think about cash? Well, I want to understand what they're talking about. And then how can our products or service drive towards that? There's 2 common metrics companies look at. One is called their cash position. Actually, the financial term is called cash and cash equivalents. Cash and cash equivalents. Now, this represents, think of the cash position of your customers as kind of like a savings account. Now, we all have savings accounts. Why do you have a savings account? What is the purpose of your personal savings account? Put in the chat box. What is the purpose of our savings account for us personally, which then allows us to think about how does it apply to our customers? Yeah, for fuel. Yeah, it's a place that we have a fuel, extra fuel in case we need it, right? Some might say a rainy day fund to save, to hold on to future expenses, future investments. Absolutely. As you think about an investor, what do they want us to do? They want to increase that cash. They want us to decrease it, or it kind of depends. Well, think about it in your personal life. We may want ourselves to hold on to more and more cash, but at the interest rates we're getting today, although the Fed's looking to increase interest rates, but the interest rates we're getting today, we're not even anywhere near keeping up with inflation. Well, publicly traded companies or even companies who have investors, they want to see that cash being used to grow and expand their business. So this cash position will kind of go up or down kind of based upon strategy, depending on what the organization is going on. But as you look at like the last couple of years during COVID, some companies, boy, they were trying to increase their cash. Think of the airline industries. Think of the travel industries. Think of like just small mom and pop restaurants and hotels, etc. Everybody was struggling with those versus companies like an Amazon or an Alibaba, where you saw huge cash generations as everybody started buying stuff online. So you'll see your customers kind of fluctuate based upon what's going on in their industry. So we think of cash position, cash on hand. If they're talking about cash, how much cash they have, how much they're trying to access through debt, they're issuing additional stock. That's all about focusing on their cash driver. The next metric they talk about is called cash flow. Now, the actual accounting term is called cash flow from operations. Now, when you think of this driver, think of this metric, think of it as kind of like a checking account. As you think about what the cash flow is, it's the difference between all the cash that comes into a business minus all the cash that goes out for running the business. This, and it's actual dollars. For all of us who are in sales, it's not just that we got an invoice out and we can count it as revenue. This is where you start talking about your DSO, right? Days sales outstanding. The terms. It's literally, this cash is actual dollars that comes into their business or your business, minus the cash that went out during that same period of time. Now, of course, some will refer to as the cash that a company generates. What do you think a company wants to do around their cash flow? Do they want to increase that? No, they want to decrease it, or again, it kind of depends. What would you guess? The cash they generate from their core business. What do they want that to do year over year, quarter over quarter? Absolutely, Jeff. They want that to increase. They absolutely want to see that increase every month, every quarter, every year. And you see companies that really succeeded during the pandemic, and then now companies that are starting to succeed as we come out of the pandemic. cash flow is vitally important. So obviously, how do we help drive those results? How can we impact their cash flow? Know that when you're negotiating around terms, a lot of that's around cash. A company wants to pay slower. Why? It helps increase their cash generation for that period of time. Of course, you want to collect faster, right? Because our companies want to have that cash available to fund. So there's this balance that you're looking at. You want to collect faster, you want to pay slower, and how you manage your inventory. These are all metrics that impact the cash. So thinking about, as they talk about cash, how can you drive towards greater cash generation is a key factor you want to look at. So what should you consider from a commercial or sales perspective? If your company's talking a lot about their cash position, one of the things you want to think about or be able to make the case is, how does your products or service deliver more business value versus them kind of holding on to their funds for future investments or potentially taking those funds and using them somewhere else? It's all about, how does your product or service really drive that investment? Use of those dollars makes sense to help drive either additional success around cash, greater profitability, more efficiency in their products or services, etc. Now, if they have strong cash flow, if the company you're working with is generating a tremendous amount of cash, Amazon was a great one during the recession. Oil and gas right now, as they're dealing with some commodity exposure, you're seeing some growth. If they're generating, the positive of a company generating a lot of cash is there's a stronger likelihood that they'll actually have budget dollars to actually invest with you. So companies that generate a lot of cash, they're not so worried about their cash. They're more worried about keeping up with growth. So they're more interested in, I need the inventory, I need the products, I need the services, I need the people to kind of maintain this growth. One of the challenges or hurdles you may want to consider around a company that has strong cash flow is that sometimes that strong cash flow is attributed because of their tight management. They really scrutinize how they spend their dollars. A great example of that would be Walmart. Walmart, you think about, if you're selling a product, I don't know, does anybody happen to sell a product into Walmart who's on the call today? If so, put me what their typical terms are that you're aware of. But if you're selling into Walmart, and you may want to get 30 days, meaning I'm going to sell my product, I'm going to invoice you, you got 30 days before you pay. What would you guess they're going to want terms to be? And because of their buying power, you're probably going to say yes to. Any guesses to the average terms for if you're selling into Walmart? They're really managing their cash flow and generating good cash flow. It's about 90 to 120 days. Of course, if I got a company like that, boy, I'm going to get beat up on my terms. Yet over time, I might be willing to do that deal because of the sheer volume of sales I can get out of that. Versus a company who has a weak cash flow generation, well, there's an opportunity there. Potentially, if your product or service can actually drive greater cash flow, boy, that's where you want to focus on. As you talk with them and it's all about, hey, we need to generate more cash. Well, let me tell you how my product can help do that. How it produces more products if it's a manufacturing company in a quicker time. How it reduces cost by being able to automate things, which then allows you to generate more cash through the production of whatever your products or services might be. Now, there is a hurdle there. Obviously, if they're not generating much cash, kind of opposite of what you're dealing with up here, they have less budget available to invest. We saw this during the downturn, as you saw companies pull back on their capital expenditures. Once COVID hit, a lot of companies, their growth initiatives got readjusted to kind of maintain their business until they come out of COVID. So definitely a time where we felt a lot of that over the last couple of years. So fundamentally, as you think about this cash driver, how should you think about from a sales perspective? Always come out your discussion with your customers. You hear them they're talking about, we got to generate more cash, our cash position. We're trying to cut costs so we have more cash available to fund future projects. That understanding, you should be thinking, how would a partnership with our company positively impact your customers' cash and cash flow? That's how you want to think about it. So that's the first driver. Second driver that fundamentally companies focus on, that of profitability. As you want to get a quick definition of what it is, it's the difference between the revenue or sales that comes into the business minus the cash that goes out of the business. Now, as you think about importance, I love Richard Branson, and he was asked at one point this question: what talent came late in life that you wish you had possessed earlier? Well, if you know Richard Branson, he's kind of an adrenaline junkie. I mean, he does a lot of kind of very risky kind of ventures, right? So he loves surfing and kite surfing. He wishes he had learned that earlier. In addition to that, and knowing the difference between gross and net. So what is the difference between gross profit or net profit? What I've got on the screen here is a basic look of the S&P 500, just to make sure we're still awake. How many companies in the S&P 500? Go and put in the chat box. How many companies there? Yes, there. Thank you. 500. We got people awake. 500 companies, multiple industries, everything from oil and gas to healthcare to retail. A great kind of index. If you were to look at the S&P 500 and just look at their income statement on average, what are we looking at? For every $100 they bring in revenue or sales, by the way, those are synonymous terms. So if your customer's talking about sales or revenue, another term they'll also use is top line. For every $100,000 they bring in, their direct cost on average for the S&P 500, about $55. Guys, this cost is actually, and as far as a percentage, it's actually, we've seen a little improvement. It has to do with some of this inflationary things that we're dealing with. But net amount generates a gross profit of about $45,000. Now, when we think about gross profit, a company's looking at gross profit. They're trying to see how profitable are their products or services they're producing, the product itself. Now, if you're providing inventory to help them produce a product, boy, they're going to try and reduce that cost as much as they can. Of course, now as you're dealing with inflationary constraints, you may see your costs go up. So if you don't increase your pricing, your margins are going to shrink. So profitability is this number right here, this 45%, is about 2 to 3 percentage points greater coming out of 2021 than it on average it typically is. You're usually looking at about 42, 43%. Has to do with some of the issues we're dealing with from a market perspective. And the outcome of that is we've got to pay more. All you have to do is go to the gas station. You see, just in the last 3 weeks, how it's jumped dramatically. It's trying to make up for some of those costs, et cetera. You take out basic, what they call selling, general, administrative. Think of those as overhead costs. Obviously, if you come to our course, we'll give you a deeper dive on what those are. And then depreciation and amortization gives you operating income. Operating income could also be known as operating profit or operating earnings. Those are synonymous terms. Sometimes you'll hear this acronym, EBIT, for extra credit points. Put in the chat box. What does EBIT stand for? The calculations for every $100,000, you get about $18,000 of operating income, operating profit, operating earnings. Anybody want to weigh in on what EBIT is? Thank you, Jeff. Earnings before interest and tax. Absolutely. When a company looks at this metric, they're going to look at it. How profitable are they from their core operations? How good is our core business is what you're looking at there. Now, another one you'll do is they'll add a D and an A. EBITDA, which actually would be a calculation right here. Before you take out depreciation, that's where you'd see your EBITDA. Don't get confused on that. It's just another form of operating profit. And companies will look at that depending on how big their infrastructure is. They may look at an EBITDA versus an EBIT number. Either way, if it's EBIT or EBITDA, they're looking at how profitable are they from their core operations. You then take out your interest and tax because this was earnings, profit, or income before you take out interest and tax. Take out my interest and tax, about a 21% tax bracket here in North America. You're looking at about $13 in net profit. $13 in net profit. This is probably 2 to 3 percentage points above what it typically is coming out of the pandemic. Now, if you want to improve this profitability, 13% profit margin, the dollar amount, I want to get more profitability. For every 100,000, I want to get more profitability. What are the levers I have? There's 2 of them. This might be worth taking a note if you want to remember. This is why we get so much pressure on this. This is why your customers pressure around this. 2 levers you have to impact profitability. Anybody want to weigh in what they might be? I'll give you a hint. It has something to do with this statement itself. I'm going to increase something. I'm going to decrease something. Any guesses to impact profitability? This would be the participatory part of our experience. You come to a webinar, you think, I'm just going to listen. No, this is one you're going to jump in and kind of weigh in a little bit. What do I have to increase to have a positive impact on my profitability? Once, going twice. Oh, thank you. Go, Jeff. Got to increase my revenue. There you go. Also known as sales. Increase revenue or reduce my cost. Basically, anything I can do to increase this one. Now, how do I increase my revenue? Well, I can charge a higher price for my product or service. And boy, right now with the supply chain issues, you're seeing that. I'll give you an example. Just yesterday, my garage door opener went out. Now, You're kind of thinking, what's the big deal? Well, we don't use our keys. Our doors are locked. Everything goes through our garage. So if that garage door is open or not opening, we're in trouble. So I call the guy, comes out, and it was about $1,000. He's told me in just the last 2 months, it's gone up 100% cost. Some of his parts have gone up 300%. Well, as you deal with that, boy, if your costs are increasing, if you don't increase your price, you're going to eventually eat up all of your margin. You're going to be insolvent. You won't be profitable. So pricing is a way to increase my top line sales, but also sell more, or what they call volume. So those are the two levers. If your executives talk about they want to grow their top line, you should be thinking, how can we help them sell more of their product or service, or how can our products create a uniqueness that allows them to charge more for the product or service? Excellent. Increase volume or price and level. Yeah, absolutely. There you go. Manage the cost. Then on the cost side, it's reducing costs here. Any of these costs right here, mitigate your tax obligation, etc. That's how you look at it. So as you look at this, what you'll find in business is some companies are going to have high margins. Some companies are going to have low margins, higher than the S&P 500 or lower than the S&P 500. Well, what allows them to get that? What I've got here is I've got a quick slide. I got 8 very well-known companies. Everybody look at them there. And please join us for this little interactive activity. I got then the net profit margins of these companies. On the left-hand side, you got those companies that have much higher margins than the S&P 500. And then you have companies that are lower than those margins. Here's my question. Which companies, or just what company, do you think has the highest margin out of this grouping over here? Go and weigh in. What would you guess? Highest margin. So Apple, we're saying in there. Yeah, the average is about 13%. Meaning, a simple way to think of it, for every $100 this company brings in, they generate $46 of profitability, greater than 3 times what the S&P 500. Amazon, we're putting in there. Think about how does the margin, what are they selling? Think about that price versus cost. Pfizer, excellent. Well, we're getting some of them. Let me just share right here. Get back here. So number one is MasterCard. For every $100 MasterCard brings into the company, they generate $46 of profitability. Facebook. Some of you said Pfizer and Apple. So two of the 4 there. Absolutely. Let's start with, why is MasterCard doing? Well, think about what are they? They connect a buyer and a seller together. They have a global presence, an infrastructure. It's a technology. Typically in a technology company, your cost of doing business is relatively low. But once the system is bid out, that infrastructure, what does it cost them to add somebody else to use that transaction? And then they get 2.5%, 2.5 to 3% of every transaction that they're doing. Not only that, but MasterCard does not finance that transaction. They're just connecting the people to be able to do that transaction. So we get a high margin. Why do they get a high margin? It's their infrastructure. It's their global presence. Pfizer, why are they getting high margins? It's a patent. If you're the only company who can sell it, then you can charge whatever you want. Apple, unique products. Facebook, the number of people come on, and then what are they selling? It's advertised. So the uniqueness of your product or service allows you to get high margin versus those companies that aren't as unique. The products they're selling aren't as unique. What do you think has the lowest margin? Basically, for every $100 they bring in their company, they generate $2.80 out of this grouping right here. Put in the chat box. What would you guess? We found Amazon's a low one. That one always throws people off because it is a software, it's an application. But most of what they sell, we don't expect to pay a premium if we're going to Amazon, right? That's not to say that they don't have products that they have high margins, but as a goal, they're bringing inventory from other companies. They're connecting consumers to suppliers on a virtual space. So we got Walmart there. Yep. Roberto, you're absolutely right. It is Walmart. For every $100 they bring in, they generate $2.80. Here's your ExxonMobil, your Volkswagen, and Amazon. Any questions or comments on this one? Sometimes this one throws people a little bit, especially as put in your chat box, how much are you paying for a gallon of gas where you're at today? Mike and I here in Utah, we're about $4.29, if I remember. I saw it as I was coming in. 29 cents, something like that. Anybody paying more than $4.29 out there? I mean, I got a buddy I was talking to yesterday, just came back from California, couldn't find anything below $5 a gallon. Interesting to kind of see what's out there. Well, in the end, what happens is that cost of production increases. Supply and demand. We don't have enough, so we gotta produce more. We haven't produced it fast enough, etc. Walmart's getting the low margin. Think of what they sell. In order for them to get high margin, if they wanted to get to like an Apple, they got to change everything they sell. You walk in and you buy a T-shirt at Walmart. It's going to be a Hanes T-shirt, right? Well, if you want to get a high margin, you got to get something fancier than the Hanes to be able to get those higher margin. It's more about, in the end, how do you think about it from a sales perspective? It's not that one is better than another. You just want to know who you're selling into. If I'm on this side of the group, it's everything I could do to be more efficient, reduce costs, and sell as much as I can. This is really a volume play. So if you're dealing with a customer over here that wants to increase their margin, it's all about how can your product or service create greater efficiency, reduce costs, sell more at a greater rate, etc. Versus on this side, it's all about uniqueness. How does your product or service either help us maintain that infrastructure and kind of the elite status of a MasterCard? Or how does it help drive a uniqueness as number of people who get on Facebook? How does that drive to greater advertising revenue, etc.? How do you continue to maintain the uniqueness? So how does your products drive towards it is how you'd use that. So one of the questions that comes is, what has a greater impact? Increasing sales or reducing cost? As you think about this margin conversation, we get a lot of pressure, and your customers get a lot of pressure on cost reduction, cost reduction, cost reduction. In fact, sometimes when we sell, we feel like that's all we get as we're working with a procurement. Can you give me a better price? Can you reduce this by 5%, etc.? The things that we deal with quite a bit. Well, which has a greater impact? Increasing sales by 100,000 or increasing or decreasing your costs by 100,000? What would you guess? Let you think of that for a second. You want to put it in the chat box, that's great. Increasing revenue by 100,000 or reducing costs? Well, if I just use the S&P 500 numbers, here's how you look at it. Again, S&P 500, about $55,000 goes out the door in direct costs. Now, yours may be higher, you may be lower. Your customer's direct costs may be higher or it may be lower. Gives you about 45,000. Now, my assumption is that a $100,000 increase, I'm not adding a whole new team of people. I don't have to build out a whole new infrastructure. So I'm not looking at a bunch of overhead or other expenses. So that should flow down right to my operating income or EBIT number. I then take out my interest and tax, about 21% tax bracket, puts me about $36,000 versus a reduction of sales. If I reduce sales, most of the time, you'll hear executives say a reduction of cost goes directly to the bottom line. They're actually kind of not telling the whole story because you never get away from death or taxes, right? So I got to pay my taxes on that, a 21% tax bracket. That's going to put me at $79,000. Which has a greater impact on the bottom line, reducing of cost. This is why so many companies get that pressure, right? You may see it in your role, but definitely you're seeing it with your customers. In fact, in this case, using the S&P 500, you got to get 2 times the sales to have the same impact to the bottom line, actually greater than 2 times that sales to get that same impact. Folks, this is why they're talking about it. This is how they think about it. Now, imagine if your sales individuals understood these concepts. So as their teams are talking about, hey, we got to reduce costs. You can help them make the business case, how your products or service will help reduce costs, create greater efficiencies, be able to drive greater revenue as well. One of the factors you want to be careful of is you can't just cut your way to long-term sustainability. So maybe you talk about the cost reduction advantages of what you've got, but also how it will also drive their sales. That's how you kind of communicate. So how do you think about from a sales perspective, from commercial considerations? A couple things to think about. Number one, get clear on what their key profitability metric is. Are they talking about gross profit, operating profit, net profit? Are they talking EBITDA or EBIT? Get clear on what that is. Then remember, what's the difference between those and how do I market? If it's all about gross, it's how does your product or service drive to the efficiency of the production of their products or providing their services? If it's operating, how does it make their organization, their core business succeed? Or if you're looking at net, it's just the overall, how can we make your whole business succeed? Remember that concept of 100 up, 100 down. Where are they focused? Where are they trying to drive their growth? You'll hear executives talk, I want to drive the top line. The moment they say driving top line, it's all about growing their revenue, their sales. So how does your product service drive towards that? If they're talking, I want to grow my bottom line, even though top line growth can have an impact on the bottom line. When an executive talks or one of their goals or your customers talking about, we want to grow our bottom line, it tends to be around that cost reduction. So how does your product or service drive towards that? And then if your customer's not unique, that's okay. Know what they are. If they're unique, focus on how can I drive towards maintaining that uniqueness? If they're a low margin company, how can I create greater efficiency, greater cash generation, et cetera? So profitability, how do you impact that? That's the outcome. How do you impact profit within your role? That's how your sales organization can change the way they do business. Assets, as we define assets, it's anything you own or control which has value. As you think of your customer, what is it they own or control what has value? What drives to their success? Are they heavy kind of inventory-based organization? They got to carry a lot of inventory to provide their products. Is it equipment? They manufacture stuff, so they got to have a bunch of equipment. Or are they more like a service company? We have relatively low assets. It's all about kind of selling as much as they can for their unique products, etc. In the asset driver, we talk about the difference between what they call asset strength versus asset utilization. Asset strength is all about the ability to stay viable during the ups and downs of the market. Growing my asset strength is by holding on to more cash. It's decreasing my debt. Versus asset utilization is how do I take those assets and deploy them within the organization? One of the things you'll think about when you think about assets, think about what does a company have and how do they then utilize it to create greater profitability and cash flow for their business. Some examples of that, Microsoft, at one time they had great strength. They still have strong asset strength, but great cash position, $100 billion of cash on hand. That's about what they had in the revenue they generated. Well, some might say that's too much to have. Why don't you take that cash, invest in something else, create greater profitability? So the balancing act was they invested in LinkedIn. They bought LinkedIn for $26.2 billion. That balanced them out. Instead of being real strong asset strength, they took some of that cash and deployed that. Versus the example of UPS changing the way their navigation system to avoid left-hand turns. They have 92,000 trucks deployed throughout the great utilization of trucks. But how does it increase their asset strength? Well, they avoid left-hand turns, saves them 20.4 million miles off their routes, obviously increasing their profitability, which strengthens their financial position as a business. As you think about assets, it's all about how can we drive? If your products or services are about them being able to produce their products or generate whatever they're trying to generate, if you have assets to drive towards that, anything you do to get your assets in place earlier, quicker, go to market, et cetera, strategy is going to be a positive for them. Anything you do to extend the life of the assets, the products or services you're providing for your customers is going to be important to your customer. And then obviously anything you can do to increase profitability or reduce costs. That's how they get to their ROI. They're looking at how well your product or service is going to help drive towards the production of their products, help drive towards increased revenue, et cetera. Anything you can do to get your assets into place quicker, extend the life of those assets, increase revenue, reduce costs, you have a positive impact on the asset driver. Now, growth is a driver that most of your customers are talking about. As you think about growth, everything I've talked about, cash, profit, asset, you want to grow those metrics. It's absolutely a goal of them. What's interesting is how you think about growth. I love this case study from a company called Alcoa. You may or may not be familiar with Alcoa. They're an aluminum manufacturing company. Their biggest clients are going to be beverage companies and automotive industry. Well, in 1999, Alcoa was trying to grow their top-line revenue, trying to expand their business. And rather than just thinking, hey, how can we sell or go to their customers, hey, can you buy more cans? Can you buy more automotive equipment? Instead, they go to a conference room, in the middle of a hotel, and they have a refrigerator in the middle. They get their engineers, they get their marketers. They're trying to figure out how can I grow my customers, which in turn is going to then grow their business. They may happen to know what they were doing or why they would do it. Well, it happened to be around what's the right packaging to kind of maximize a refrigerator space, but also increase the use of the product or service. Remember, we had the six-pack, then we went to the briefcase back in the day. Boy, putting a briefcase, a case of your favorite beverage in your refrigerator took up the whole refrigerator. So what did you do? Put 5 or 6 cans in there, right? Well, now all of a sudden you get through your 5 or 6 can, or you have kids like me, they don't replenish, and all of a sudden you have a cold one. You don't want a cold one. I mean, you have a warm one. You want a warm one, so you got to put them back in. So what's the optimal amount? The outcome of their discussion, they're just working with their clients, was the fridge pack. We're all familiar with the fridge pack, right? This increased sales by more than 10% for Coca-Cola. Any guesses to what that did to Alcoa's sales? Obviously saw tremendous growth. It was all about thinking about how's my customer trying to grow? What can I do to help with that? It was packaging, something that many of them would have thought, hey, that's not something we should be focused on. That's not our focus anyways. So as you think about growth, what are the commercial considerations of sales? Here's another example. So that was all about growing the top line. Here's about growing the bottom line. I don't know if you've heard this one. American Airlines saved $1.2 million on fuel costs per year. Anybody happen to know what it was? Was it more their flight structure? Was it kind of more fuel efficiency, or was it with iPads? Anybody happen to know this story? Ever heard this one? It's kind of a fun one. Once, going twice. Well, if you haven't heard it, I think it was around 2014, if I remember right. They have this it's called the pilot's flight bag. It has all the information, and it's paper stuff, right? It's a 35-pound pilot flight bags. If you go to the airport, you'll notice that they're actually on a roller. I get it why it's on a roller. It's pretty heavy to do that. But they changed the way they looked at it. They put it all on an iPad. That saves them 1.2 million dollars around fuel costs a year. Folks, in the end, how can you drive it? How can you as a sales individual drive the success of your business? You got two levers. You can be like Alcoa. Think about your customer, how they're trying to grow their top line. Think about how your product or service can drive towards that. But maybe it's a cost side. It's about how your products or services reduce costs, automate, create a greater profitability for the company by reducing those costs. And the Apple example is all about cost reduction. Either way, you're going to get to that bottom line results. So listening to your customer. If they're talking about top line growth, think about anything you can do to help your customers sell more or increase their pricing. That's how you're going to have a positive impact. If they're talking about growth of their bottom line, anything you do to help to reduce their cost, be able to help them be more efficient, automation, etc. That's what you want to look at. And that around the growth driver. And everything we've talked about thus far, it's all around growth. Well, the last driver we talk about is that of people. And as you think about people, it's all about anticipation. How good are you at anticipating your customer needs? I love this quote from Henry Ford. He was an example of somebody who anticipated in a level that many of us, I know I'm not that good at this. He says, I would have asked my customer, if rather than talk to his customers, so if I would have asked my customers what they wanted, they would have said a faster horse. Of course, the example that we benefit from Henry Ford's early 1900 kind of changed the way we transport or move in the world today. Of course, here we got 1904. This is an Easter parade. If you look closely, you actually see there's most of it's horse and buggy. You get closer. Here's an actual vehicle. Actually, this one next to him is also a vehicle. 9 years later, talk about the ability. This is again New York City Easter parade, 1913. How much that's changed. Now, folks, from a sales perspective, if you're good at this and you can anticipate what your customer needs before they even know they need it, and as long as you can execute around it, you're going to have products or services, you're going to have a business that's very, very strong. That being said, most of us aren't able to do that. So there's ways in which we do it. But listening to your customers, listen to what they're driving towards, really differentiates your sales individuals to be able to provide solutions that help drive the results they're trying to get to. If you're not very good at anticipating needs, it can be a challenge. When's the last time you just think this thought, when's the last time you rented a video? In fact, I'm trying to think the last time I played a DVD versus when's the last time we streamed a video. Yesterday, I don't even have cable. I just got rid of cable. Everything's streamed now for us. Of course, we know the example of Blockbuster versus Netflix and that transition. Netflix in late 1999, early 2020 went to Blockbuster and said, why don't you buy us? They were having a hard time getting access to content. Streaming was just starting to pick up a little bit. Blockbuster says no way. Of course, by 2013, Blockbuster went into bankruptcy. Dish Network bought their brand out of bankruptcy. Of course, Netflix has done tremendously well. Here's another example. You remember the digital, remember that Polaroid? That was pretty cutting edge back in my day. You're waving it, get ready for that picture versus digital photography. I love this video right here, or this picture right here. This is Tiger Woods earlier on in his career at the top versus the last couple of years. Backwards. Earlier on, this was early in his career down here, and this represents recently. Think of how that's revolutionized what we do today. If you get good at anticipating customer needs, it's about understanding their needs. It's having conversations. It's being able to listen to what they say and be able to make sense of it. That's what this driver is all about. So a simple way to approach this, 4-step process. Number 1 is identify who is your most critical customer right now. Get good at figuring out what is it they need. And by the way, anticipate what may they need that they don't know that they need. From there, how would the customer rate you on your performance, or what are 2 things you can do to improve your rating? Think about it from a sales perspective. You're very focused on your customer need. But as you start to weave in their business metrics and measure what they're focused on, what they're driving towards, listen to what they're saying, then how can your product or service drive towards it? That's the goal. That's the differentiator. That's where you move from a sales individual to a partner with your customer, a business leader who happens to sell. Well, folks, that is the 5 drivers. Those are the 5 drivers every company focuses on. A quick look at the key metrics and measures and how to think of it from a sales perspective. So we now understand the difference between cash and cash flow. And if they're talking about, think about how does your product service drive towards that? We understand the basic profit measures from a P&L and how you impact your results. Your customer's result. We understand the importance of asset strength and utilization, kind of that balance. Understand your impact on top line as well as bottom line, the levers you have to increase revenue or reduce cost, and understand the importance of anticipating customer needs. That is the outcome of what we want to try and do today. My goal as you move forward is to try and help your employees as they go throughout their organization. What we find working with organizations, more employees is thinking about as they talk with their customer, are they how the partnership with your customer will drive their cash, their profitability, their assets and growth. Align it with the executive's communication. We have some of our teams that do this training with us who literally come back, they have a conversation with their customer. They say, how do you know so much about our business? That ability to understand their business in a way that helps them make a business case, it is a differentiator in your sales process. So to wrap up today, my goal is to help you and your teams. If your customers ask, how well do your sales individuals understand my business, that they would give you that A is our goal today. So that in mind, we'd love to talk with you. If you found this interesting, something you want to be interested in, go to our website, acumenlearning.com/contact. We'd love the chance. If you see this of value, this will truly differentiate, and you need to talk to us. So reach out to us through that website. With that being said, it's been my pleasure. We got a couple minutes to stick on. I think Mike's going to ask some questions, so stick with this. But thank you for your time. I'll turn it back to you, Mike.
Yeah, for sure. Thanks so much, Brent. That was great. I want you to go back a slide, Brent. Quit showing that video wherever you went to. I want to go back to those 5 business drivers, because here's really the point, folks, is everyone tells you to go talk to the senior decision maker. Everybody goes and tells you, hey, you need to go talk to the CEO. That's what we need to do, is we need to kind of work our way up in the sales strategy and talk to those senior folks. And those senior folks, sorry, they don't want to talk about your product and service. They want to talk about their business. They want to talk about how they actually drive cash, profit, assets, growth, and people. And I think that's the real genius behind what we do here at Acumen Learning, is give people that base foundation of understanding. We're not here to turn you into accountants. That's not what you need as your sales reps to be. But every sales rep needs to understand the drivers and the levers of business. And that's what business acumen training can really do for sales organizations. So Brent, I just wanted to talk about kind of delivery methods. Obviously, we're sitting here on WebEx. The world has kind of changed with COVID. How do we deliver this inside of Acumen Learning? What's the best approaches as far as virtual, as far as on-site, as far as number of days, hours, those types of things? Talk to us a little bit about the modalities of our sales program.
Yeah, so everything we sell is a customized approach. So we'll go through and figure out who's the audience, what you're looking at. But our typical approach on a building business acumen for sales professionals, it's going to be a 2-day program. And of course, we can do it virtual, and there's a couple ways to do that. Some groups, it's a smaller section where you're doing 3-4-hour sessions. The other way we do that is we'll do 2 days where you're doing basically 6 hours of content. You do 3 hours in the morning, an hour lunch break, 3 hours in the afternoon, and do that over 2 days. Obviously, from a live perspective, it's 2 full days as we do it face-to-face type of approach. It's a great way to do that, and we can be quite flexible. Sometimes we'll break it up over a period of times, and we have different groups going at the same time as well. We have an online program. If you're sitting there saying, hey, I want to learn this, but my whole company's not going to go after that, how can I build myself? We've got a kind of award-winning program. It's a 13-module program that covers these 5 fundamental drivers, as well as the basics around the financial statement, that a sales individual could go into that, get some basic knowledge, and then with their sales expertise, be able to listen to what their customer's saying, or perchance, if it's a publicly traded company, listen to an earnings call. What are they talking about? And be able to take that back to their team. We also do some follow-on resources where we can look at your customers and do an analysis of your customer. Using the tools they get in the class, they can then go assess any of your customers, either publicly or privately held companies, to assess what's going on in their business. So we follow that up with publicly traded companies, where literally we'll go in with a sales team, We'll look at their top 2 customers. We'll look at what they're talking about and assess that and help your sales team really get aligned with what's going on in their business so they can go back and say, how can a partnership with your company really drive to that success? Let me know if that answers your question, Mike.
Yeah, totally. Brent, when you step into a sales call, what are the 2 to 3, or what are the steps that, like, these are the things that I do?
Yeah, so in preparation for any sales call, I'm going to scan their website. I want to see what they're talking about, what they're communicating. They have any press release. Obviously, if it's a publicly traded company, I'm going to jump into their most recent earnings call. What do they talk about? What are some of the messages? I like to look a little bit, if it is publicly traded, where their financials are right there in front of me, I'll look at that. If it's not there, and maybe it's a privately held, I'll look at a publicly traded company that's in the same industry. For example, maybe I got a privately held healthcare company, and I can't access their data. Well, I can look at Humana's, I can look at Aetna's, and I can see that medical loss ratio, expense ratio, or key metrics. So when I talk to my customer and I'm talking about what they're focused on, I can ask questions that align with the metrics or measures they're hearing about. Then I want to look at who it is I'm selling into. So I look at obviously, and most of us do this, look at where they've been, what they're focused on, trying to understand where they're coming from. Because my goal is, I see sales as not I got to get my product kind of forced down their throat, so to speak. It's all about what are they trying to do, and do I have something that can really drive towards the results they're looking at. So I'm looking at kind of their financial performance, their strategic performance, and who I sell into. And with that, what might be their challenges? That's what I'm going to try and answer on the call as I try to qualify the potential opportunity. Does that answer your question, Mike?
Yeah, for sure. And that's the questions that I have. If anybody else has a question, we're here for just actually, it's almost right at the top of the hour, but if anybody has a question they want to put in the chat box. But I want to encourage anybody who's interested in this. The bottom line is this, is that most executives and most buyers are pretty smart individuals, and they want to talk to other smart individuals who understand their business and understand how buying our product or service can help your business achieve its goals and objectives. And that's what a lot of times in sales organizations, the real missing link is you have really smart sales reps who understand their products and services, and that's what they want to talk about. And what they got to do is they got to flip the script and start to understand, all right, let's take a step back and really diagnose, what is our customer trying to accomplish? What are their goals and objectives? What are the financial metrics that their executive team is really looking at? Okay, now that I diagnose that, now I can really go in and prescribe my solution that really drives to those key metrics, or drives to their strategy, or drives to one of these 5 business drivers. That's what it's really about. Want to thank everybody for coming out today. Brent, want to thank you for your time and your expertise. And please, if you're interested, Brent, go back to that slide that has the URL on it. If you're interested in learning more and having a conversation, we'd love to talk to you more about how we can help you kind of earn that A on your sales team, and talk about the great training that we can provide to your sales organizations. I want to thank everybody for coming, and have a great rest of the week.